Welcome my top 10 people I would trust with my last slice of pizza. Please remember this is not financial advice. Yesterday, Bitcoin closed another daily candle in the red and was rejected almost perfectly at the 21-day EMA, exactly as we expected. And the warning signs continue to pile up. First, DVO, Bitcoin's volatility index, closed green, while the VIX also gapped higher. That's generally not what Bitcoin bulls want to see. Rising volatility and rising market fear tend to create a tougher environment for risk assets. At the same time, Bitcoin remains below the short-term holder realized price, a level that often acts as resistance during weaker market conditions. Bitcoin ETF flows remain negative, meaning more money is leaving than entering. At the end of the day, Bitcoin needs fresh capital to sustain a rally, and right now the flow data simply isn't supporting that thesis. Bitcoin's funding rates remain positive, which means longs are still paying shorts. Historically, when positioning becomes too one-sided, the market often moves against the majority before finding a bottom. The dollar index has broken above its Q4 2025 high, confirming a major breakout after months of resistance. If this move continues, the next major target could be the 200-week moving average. A stronger dollar generally means tighter liquidity, and that's really good news for Bitcoin. On the monthly liquidation heat map, Bitcoin is much closer to a massive liquidity cluster sitting around $58,000 than the liquidity above price near $75,000. And what's even more interesting is that liquidity continues to build around the $50,000 zone, which also lines up with several important on-chain levels. Bitcoin could take out the liquidity at $58,000, run up to $75,000, and then drop all the way back to $50,000. That scenario is also possible. But when you combine a dollar breakout, negative ETF flows, positive funding, rejection at the resistance, and growing liquidity below price, the path of least resistance still appears to be lower. And that's why I posted on X. The valuation stress metric is still not low enough to confirm a market bottom, as every bear market has pushed it to 10% or lower. Right now it stands at 22%. The VWAP-R metric is not yet close enough to signal a market bottom, since in every bear market the bottom has fallen to at least 5% or lower. Currently it stands at 9%. So what do you think? Has Bitcoin truly bottomed? Or is the real capitulation still ahead? Let me know in the comments. Have a nice day. Bye!